So I
So good
think
morning
screen
everyone
is
and
visible now.
welcome to yeah. So good morning everyone and
Yes,
welcome
sir.
to today's SMS. So now over to Ramandeep ji.
Okay. Okay, sir. Okay. Okay. So good morning, all of you friends. Today, as we were discussing, we are supposed to discuss on section 49, which is relating to payments in GST. Payment in GST is something which is ultimately everything, the whole levy, the taxation, the place of supply, and every other thing conclude with the payment of tax, interest, or something like that. And that is why, even though section 49 seems to be a very simple and kind of procedural section, but believe me, there are many things which has arisen, many things which has already evolved by way of various judgments uh, in the field of blocking of credit, when we say the payment of interest, and when we talk about the cash payment, mandatory cash payment, and the utilization of input tax credit, how much we can utilize and how much we cannot, all this is discussed in this particular section, section 49. And that is why we will be discussing some of the issues I have identified in this. But if at all I am missing something, please let me know and please let us discuss what uh, whatever issues you find and whatever points we need to discuss. So section 49 is on payment we were discussing, and it says that every deposit, whenever made toward tax, interest, penalty, that should be done by four ways in the section itself. It says mentioned internet banking, credit card, debit card, NEFT, RTGS, and it gives powers also that it can prescribe other modes also. And that will be subject to conditions, restrictions as may be prescribed, and all this payment will go to the cash ledger itself. So you may notice that there are only five methodology is permitted here, but and it says that other modes also can be prescribed subject to some conditions and restrictions also there. So and that this payment will go to the electronic cash ledger to this. For this, if we see, there is another rule 87 relating to 49(1), which says that cash ledger will be maintained. There is a specific format given in GST PMT 5, and in this format, the complete cash ledger will be maintained in the common portal, where it will be credited when the amount is deposited, and when the payment is made, it will be debited. So it is as good as a bank account maintained in the GST portal in the PMT 05 itself. Then it says if any person who needs to pay the challan has to generate PMT 06 challan, and it will remain valid for 15 days, and by this you can make a payment. Then there is a rule 87 says that rule 87 also prescribes some new method, new way, which was not there in the section itself. And one of those were UPI, which we seems have been added to this. And IMPS facilities were earlier not there. That is also been prescribed. And over the counter payment. See, over the counter payment method was not there in the section 49, but in the rule it is prescribed that over the counter payment through authorized bank for a deposit up to 10,000 per challan is prescribed by way of cash, check, or demand draft. Now, even though this counter payment says that only up to 10,000 rupees per challan can be done. Now, so important question arise here is that what will happen when let's say the GST department is in the recovery mode of any enforcement and anything else, and they recover some cash amount in the process of recovery itself. And so and let's say if how they can collect with which who's with what power they can collect this cash, they can deposit in the bank, and they can utilize the liability. So let us see one case relating to this. The enforcement wing of the GST department conducted raid on an unregistered person. Following the race, a case was built. After the adjudication, demand for tax, interest, and penalty was confirmed. During the recovery proceeding, the GST recovery officer collected cash from the unregistered person to pay the government dues, which has been pending for more than 6 months. Now the question is, cash collection by the GST. Can the GST officer collect the cash? And can the officer deposit the amount in the cash ledger of this unregistered person and subsequently utilize it for the tax payment? And second point, if instead of collecting the cash, officer attaches immovable property, follows a proper procedure, and department sells those property, how is the received amount adjusted against liability if we assume the check is received or cash is received in that case? As we can see, 87 says that over-the-counter payment through authorized banks for deposit up to 10,000 rupees per challan, and it is very clear that only the specific mechanisms are permitted. So if we go ahead in Rule 87 to Rule 87 Sub Rule 3, there is a proviso which says that this 10,000 rupees limit will not apply in case when payments are being done by the government department or any other deposit as may be notified by the commissioner. And second, relating to our case, it says that any proper officer or any other officer authorized to recover outstanding dues from any person, whether registered or not, including recovery made through attachment or sale of immovable property, that there is no limit of 10,000 will apply in that particular case. See, surprisingly, that we have been seeing that in the enforcement activity, now the guidelines is also issued saying that during the raids, during the search, during the 67 proceeding, you cannot collect cash, check, or coerce the person to pay immediately. But Rule 87.3 says that where proper officer or any other officer authorized for amount collection by way of cash, check, or demand draft during any investigation or enforcement activity or any ad hoc deposit. So for that, again, this is there is no limit. They can collect cash as well as during the time of raid itself, and they can deposit it. They can deposit the check itself. They can deposit the demand draft during an investigation and enforcement activity. I don't know, but here in Chhattisgarh, we see usually the state GST department whenever they used to go, they sometimes they ask them to pay directly DRC 03 challans. They force it, press it, and sometimes they even collect the PDC check as well. I don't know they how they will enforce or not, but they collect PDC check undated, signed in the favor of department. They used to collect it in the form of security itself. So this is the mode which has been prescribed in 80 in 49(1), and so cash payment and collection by the way is also allowed as per 87(1). Now any point on this 49(1) up to this?
No, I think
Shall I go ahead?
Yeah.
Yes. Then Rule 87 categorically says that if there is any charges on the payment, so again this is again a very small point, but they have taken care that whenever during the payment of tax through any mode it is arising, and whatever charges the bank or the payment method is collected, that will be borne by the taxpayer itself, and department will get the complete money, complete tax payment. That is very well covered in the explanation itself, and it says that if there is any commission, if any payable in respect of such payment, that shall be borne by the person making such payment. Now, so they will get whatever their full payment, and whatever charges will be there, that the taxpayer will borne that. Now in 87, another interesting proviso is created. What was happening is that whenever uh, a person a person who is not residing here was providing any OIDR services or gaming facility, and they are providing to non-registered online recipient, so they are supposed to take a registration through some agent in the country itself, but they were not having the local bank accounts to pay the taxes. So they were struggling how to make payment, because all of this payment method which we have seen, that NEFT, RTGS, IGST, for that they required very much bank account in the country itself, but they were not having that facility with them. So for that OIDR and online gaming which are located outside India, but they are providing their facility in our country. Um for them for making payment, a special methodology is also prescribed, and which says that for them there will be a SWIFT facility available. SWIFT, all of us know what is SWIFT method, wherein you can transfer this money through SWIFT to a designated bank. And in fact, I have a very less exposure dealing with OIDR and online gaming as a client, but we do our recipient generally avails these services. But as far as OIDR, we were not having any facility, but I'm surprised to know that for them there are special facilities also available for making them payment. So all of these two taxpayers under section 14 and 14A. 14A is OIDR and 14A is online gaming. If they are providing from outside India to a person in India, non-taxable online recipient, for them a specific facility is available to make payment in the form for them. The SWIFT, they can make this payment by SWIFT, and complete procedure has been prescribed. They can check the eligibility of the foreign bank. They can make the SWIFT arrangement. When they are making payment, they have to use a specific bank account. They have to mail their challan details to the specific bank email ID, and once they do, the bank will give them a challan number, and after that they can very much complete the payment process itself. So this again is another facility available for OIDR and gaming with non-tax for the person who are in the non-taxable territory. So this was only 49.1. Now we will be coming to 49.2. Now section 49.2 is another section where which is relating to input tax credit and self-assessed credit. It says that input tax credit as self-assessed in the return of a registered person shall be credited to electronic credit ledger in accordance with section 41. And there was an amendment done here where this word section 41 was amended in 2018, and a word also added as per section 41 or section 43A. This word 43A later got deleted from 1st of October 2022. But surprised to see that this amendment which was done, 41 or 43A, was never notified. So the section becomes originally the same. The 41, it was originally 41, later it was amended 41 or 43A, but later this amendment was not notified, and later they have deleted. 43A was deleted with 1st of 10, 2022. So now what is the relevance of this? It shows, it says self-assessed in the return, it can be credited in the electronic credit ledger in accordance with the section 41. As we see section 41, 41 says that the credit of input tax availed by a registered person under subsection 1 in respect of such supplies of goods and services where has not been paid by the supplier shall be reversed along with applicable interest. So all those cases where my supplier has not paid the tax, section 41 says that you need to reverse that in the credit along with applicable interest. Now let us see one case in front of us, and we will see what difference it will make here. Yes.
Raman
Anybody?
sir,
Yes, sir.
Raman sir, one thing shall I add, sir?
Please, sir. Please, sir. Go ahead, sir.
See, you mentioned that 43A was never notified. Okay. See, 43A was inserted. See, I think it was the 28th GST Council or something. They proposed a new scheme of return filing, sir.
Yes,
to
sir.
align
Yes,
with
sir.
that new scheme, only this 43A was introduced. But that new scheme never came into existence. So it was never
Correct.
notified. So that only it was deleted, sir. Yes, sir.
Right,
Just
sir.
for information.
Right, sir. Yes, sir. Sir, but point here is when they have substituted this word 41 or 43A, that was done in 2018. This change they have not notified. First of all, they have notified so that this word get added, but and then they would have deleted this. This added part is never notified at all, but deleted part is notified. I hope you got my point, sir.
Yes, sir. Because 43A
Yes.
never came into existence because the new scheme was never notified, sir. See, 43A
Okay.
was only to take care of the new scheme. See, the new
Right.
scheme, it is a very lengthy process that, if my memory is correct, it is on 28 GST Council minutes, you can find it, sir. See,
Yes,
there
sir.
they are
Yes.
mentioning about a single return. So
Yes.
where you
Yes.
can take the ITC and then adjustment and then so much of amendments. To align
Right.
with
Right.
that, this 43A was brought in, but they never implemented that, sir. So that
Got it, sir.
only it was never notified, and then they deleted this only, sir, because it is there is no relevance for this portion.
Got it, sir. Got it, sir. Got your point, sir. Got your point, sir. Yes. Thank you. So let us see to understand the relevance of this provision. We have a practical case where Mr. Pinto has taken a services from advertising agency in the financial year 1920 and has availed input tax credit complying all the condition as mentioned in section 16. Later, Mr. Pinto, during the scrutiny of return, has got notice saying that advertisement agency has not paid the tax to the government. He is required to reverse the input tax credit availed along with the interest. All of us face these kinds of issues with us. Mr. Pinto, on the other hand, believes that he has checked all the conditions, he has made payment to the vendors, all the relevant documents he has. If the vendor has not made payment, what was his fault and how he can be punished as he has availed ITC as per section 49(2). Mr. Pinto seeks help of the consultants from SMS Group. Will it make difference if the case is of financial year December 2022-23? Now, why we are discussing this is with respect to section 49(2), and this is a case of 1920. And if we see this complete picture, the 49(2) says that as self-assessed return in the input tax credit as self-assessed in the return of a registered person shall be credited to his electronic credit ledger. So 49(2) says all the input tax credit you can very much take self-assessed in your electronic credit ledger. And then it says you have to comply with section 41. Now, if we go to section 41(2), it says that you need to reverse when the supplier has not paid. But does this 41(2) was originally like this or it later got amended was an important question to check. And in our case, this is a case of 1920. And that is why we have included this, whether it will make difference when it is of 22-23 case. Let us understand what was there in 41 originally and later when it got amended. So when we see 41 originally, it says that claim of input tax credit provisionally acceptance thereof every registered person subject to such condition and restriction as may be prescribed entitled to take credit of input tax credit as self-assessed in his return and such amount shall be credited on a provisional basis to the credit ledger. And subsection 2 also says can be utilized for the self-assessed output tax as per the return referred in the said subsection. But later, in the Finance Act 2022, with effect from 1st of October 2022, this get completely amended. All of us know that now this conditions has been prescribed that where the supplier has not paid the tax, we have to reverse it with applicable interest by said person in such manner as may be prescribed. So amending this section 41, does this give an indication that earlier this was not at all required? When the supplier has not paid the tax, it was never my business to do. I was supposed to take my credit as per my self-assessed credit, and I am very much of my right to pay the output tax liability. What are the views of the House?
Ramandeep ji, may I?
Yes, sir. Yes, sir. Please go ahead.
I wish to bring your attention to the provisions of section 76 also, where it says that the tax, whoever is collecting the tax has to pay the tax to the government. So
Correct.
before the amendment was introduced in 1st October 2022, we can take the support of the provision of section 76 also to substantiate our claim that if the supplier has not paid the tax, it is the responsibility of the government also to collect the tax from the supplier only, and we are not required to reverse the ITC. Although the provision
Right.
is still there, but because 41(2) has been modified, so we need to see it again in the light of 41(2) and 76.
Right. 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 Point. Very well noted, sir. Yes. So, any other view, anything else, any contribution to it? So can for the year 1920, Mr. Pinto says that the 49(2) read with even 41 also, I am very much in with my right that I can take input tax credit. If somebody has not paid, it is not my business. And this amendment in section 41 itself says that there was earlier no provision which requires the payment of tax, especially for the 1920.
Ramandeep, one point I think which also need to be pondered is that as per section 41, which prescribes that the person is entitled to take the eligible input tax, right? As self-assessed. And
Yes.
what is eligible input tax? We have to refer to section 16 and then 16(2) conditions are there, which were from the inception. I think it was the condition that the tax has been paid to the government. That was the condition in section 16(2). So eligibility of input tax for the purpose of this section, should we not refer to section 16 also at this point, and then we should decide it?
Right.
16 is subject to conditions as may be prescribed.
Correct.
And we have to go always from the moment when it says as the conditions prescribed. When the substantive law did not give the condition, we go by the procedure. And when the payment of tax is linked to filing of returns by the supplier, so payment of tax is now akin to if the supplier made a nil 3B filed also, it is deemed the taxes have been paid.
Right. Right.
So my
And
question is of how to interpret the word eligible input tax, which is mentioned in section 41 pre-amendment. So eligibility of input tax should be not referred to for section 16 for that purpose.
Yeah, I think Virendra ji, this eligible input tax credit was also referred to in the matter of Rule 38, read with 17(4) for those banking companies who have to reverse 50% of the eligible credit, or rather
Correct.
avail 50% of the eligible input credit. In that context, this was also discussed. So I think you have pointed out the right thing, that eligibility will start from 16 and it will travel to 17.5.
yes.
So,
Ruji,
RBG.
if we go through section 16
हाँ,
and section 41, section
हाँ,
16 2C is itself subject to section 41 since inception. And
right,
that is there is a reason that why it is subject to section 41, because section 16 2C only allows the credit once the tax has been paid by the supplier. But
right,
section 41 since inception created a exception wherein even though the tax was not paid by the supplier, but still I was eligible for the credit, because section 42 at that time provided a mechanism wherein I can claim a credit and inform the supplier that you have not incorporated the amount in
yes,
your
yes,
GST1, and next GST1 you have to incorporate it. But if you fail to incorporate in the next GST1, I was required to reverse that credit. So we have
right.
to see section 41 in that respect, that why it says
Because,
eligible credit, because section 42 initially allowed the claim of credit without payment of tax by the supplier, and in the next month it required it to be reversed. So that is why
yes,
section 16 2C is subject to 41 and section 49 is also subject to 41. So it was never a case that even though my supplier had not paid the tax, I was eligible. Only I would say that post the amendment, a larger window has been given for claim of the credit, even though the supplier has not paid the taxes.
Right. Right.
Sir, what is the impact of that recent decision, 9th December, McLeod Russell India versus Union of India, State of Assam?
no, that is on
Guwahati-
16 to AA mainly.
16
Yeah.
to AA, sir. That is on 16
It
to
is on
AA.
16 to AA.
Yes.
But there also, one of the point
We-
is about the ability of the purchaser to claim, based on the supplier's supply. No?
That is
No,
that
there's
is
a
starting directly on the question that whether it is, if it is not appearing in 2A, you can take input tax credit or not.
yeah, and it's limited to certain issues, factual issues.
Yes.
Like
Yes.
it was a B2B supply, your supplier has mentioned in B2C. So the supplier has actually paid his tax, he's discharged his tax. But for this clerical mistake of mentioning a B2B into B2C, whether your ITC should be restricted for a mistake
Yes.
of the supplier. So all those contexts are there. But coming here to what Arpit was sharing is that 41 was kept with the thing that 42, 43 was in picture. So since 42, 43 could not see the light of the day because of this GSTR 1, 2, 3 not coming in, I think even I go with that same view that eligible input tax credit will happen only when the vendor has actually paid it. But again, where we argue the matter is that how am I supposed to know whether the vendor has paid it or not?
Right. And
Because
I would also, yeah,
because in GSTR 3B,
as far as
we don't have any invoice level details. In GSTR 1, we have invoice level details, but in the 2A, but in GSTR 3, we don't have invoice level details. So suppose he has shown in his 1 crore and in his 3B is paid 50 lakhs. So whether my bill, my invoice of 10 lakhs is included in that or not, that mechanism is still not in place. So that is one ground that we take, that the thing is not provided by the system itself to know whether the supplier is, the mechanism is not there to know.
The same view has been taken in, the same view only has been taken, no, sir, in Russell case, McLeod Russell case also, there is no mechanism to check. So that is also one of the valid grounds, sir.
Yes,
sir.
Another
And again,
one point I would like to say that on the word eligibility, in one of the case laws with respect to blocking of credit, a court interpreted, because the blocking of credit rule says that all those ineligible credit can be blocked, ineligible word. There the court interpreted that whenever the payment is not made within 180 days, you cannot say that it is ineligible credit, because Section 16 conditions were at the time of claim was complied, and later when again payment was not made within 180 days, it doesn't become ineligible, so that you can block input tax credit for that reason. So there the eligible word they have interpreted is at the time of availment you need to check the basic conditions, and if it is done, then it was eligible. Yes. So any point on this, or can we move ahead?
I think let's move ahead. But today, just for the sake of the house, today we'll continue till 10:15 because we started at 9:15 because of some technical glitches. So we'll continue till 10:15.
Sorry.
Right, sir. Right, sir. So all this type of defense usually we take for this type of cases, whether reversal was required under any provisions of law, it is impossible. Even the council minute says that when somebody has not paid, first recovery has to be done by from whom, and then we have judgments like this. And I think cases are strong enough. But what will happen afterwards cases like 22, 23 cases where 41(2) was quietly enabled and was available. There, I think we can say impossibility is one of the major ground, and recovery from the supplier is again a very important and interesting ground we can take in that particular cases. Now let's come to
Ramandit, sorry to interrupt.
Yes, sir. Yes, sir.
Even current position, if you look at 41, payment of tax, I don't need to prove impossibility. Payment of tax, I would only stop with that 3B. That's all.
Correct, sir. Correct. You're right, sir.
Yeah.
Right.
So we don't need to say that, okay, mechanism is not that. The mechanism is he filed 3B, then deemed the taxes are paid.
Correct, sir. Venu sir, what is happening in when the enforcement is building case, they are saying that 3B is filed with the bogus input tax credit, and that is why this tax has never been received to the government, and you are required to pay the tax.
I agree, but the law did not the Section 38. The only currently given only 37A, which is in line with 41. Right. So I think we don't need to, whatever they say, they can say. Legally, payment of tax is supplier filing 3B. Whether he filed nil 3B he filed with bogus input tax credit. It is all the departments, nothing to do with us. We don't even need to make an allegation. That's my view.
Right. Right. Right.
Ramandeep
Ramanji,
ji, what
Ram-
the
Sir.
hello?
Yeah. Yes, sir. Yes, sir.
Ramandeep ji, what the example which you have quoted that the recipient has the supplier had availed ineligible credit,
Yes,
and
sir.
what Venuji is saying that filing of 3B is sufficient proof. These are two different situations, because in the situation which Venuji is saying, therein the allegation of the department is that the supplier has filed a nil 3B. So in that case, section 41, rule 37A is applicable, that he has filed a 3B, but it is
Okay.
nil. That even if though it is nil, there is no non-compliance of section 41 read by rule 37A. But in your case, since the
Yes.
supplier has filed 3B and used the ITC, so therefore in that case there is a violation of 16(2)(c), that the tax was not paid by using eligible ITC by the supplier.
Right. Right.
So
Right.
it becomes important that which section has been invoked by the tax by the department. Whether if in the Venuji's case, section 47 rule 37A was invoked, then there is no non-compliance of that provision, and the notice should be replied accordingly. But in your case, if 16(2)(c) is incorporated,
Yes.
then
Yes.
we cannot rely solely upon section 41 rule 37A. We also have to go to rule section 16(2)(c) and plead impossibility there.
Correct, sir. Correct. Correct.
Um,
Correct.
Sir, I have one query. This is Raghunathan here. In the
Sir,
case
sir.
of Suncraft Energy, that case, Supreme Court has rejected that case basically because of the minimum effect. Because of
Correct.
that. So when we
Correct.
quoted before the authorities, the appeal commissioner, so he was of the view that since Supreme Court has not gone into the merits, but he did not consider the High Court's case, but he said that he is not going to consider. In such case, what will be our defense, sir?
Sir, I think a High Court judgment is very recent judgment. In fact, in the Suncraft High Court judgment of Kolkata High Court is a very recent judgment that
No,
court
I
has.
think it is early 24 or late 23, sir.
Yes, yes, right, you're right. So it is
Yeah.
very recent judgment, and we can very much use it in our constituency until unless there is any other negative kind of judgment in your particular area. Otherwise, Suncraft is very much can be used, sir.
Okay.
The tax
Okay.
officer have a habit of, not trusting any judgment, sir.
Okay. No, my query is that in case this Supreme, because we had this issue in income tax also, because of low effect one case which was in our favor at High Court, but not taken up by Supreme Court, the officer said that it is not taken up on merits by Supreme Court. But the law, if I understand correctly, I may be corrected, that when it is not done, the final judgment of the High Court stands. Am I correct, sir?
Correct, sir.
Yeah.
Correct.
Okay, and again 1920 when we are discussing, up to September 19 is one case, and from 19th October 19, this 2A was made sort of mandatory with the 20% gap and 10% gap later and all that. So our approach should be different up to September and later from October to October 19 onwards. So this is my
now-
humble opinion.
Yes, now that sir, we have a detailed judgment on 16(2)AA, I think we can
Okay.
Use that, and we can very much argue on that basis.
Okay, okay. Okay,
Right.
thank you, sir. Thank you,
Right,
thank
sir.
you.
Right, right. So
Sir,
let us come
may I?
to. Yes,
Sir,
sir.
may I?
Yes, sir. Yes, sir.
Yes, sir. Yes.
Sir, I just, I wanted to share two things. One, Arpit sir has already shared about the Rule 37A. The second point regarding 41(2) is that though it came in 22, it is effective from 1st of July 2017.
Okay.
So if that notice was issued after 22, the year will not matter because it retrospectively effective from July 2017. That aspect should also be considered.
Okay. I think let us move ahead with the section 49 itself and not divert too much on the other connected kind of provision. Otherwise, we will miss the 49 part here. So let us go to now 49.3 and 49.4 will study together. So 49.3, it says that the amount which you have deposited will be available in the electronic cash ledger and may be used for making any payment towards tax, interest, penalty, fee, or any other amount payable under the provisions of this act. And that can be made provisions of the act and rules made thereunder and such manner subject to such condition within such time as may be prescribed. And there is section 49.4, which is on electronic credit ledger, which says that amount available in the credit ledger can be used for making payment to output tax. If you will notice the difference, in cash ledger it says towards the tax, and here it says towards output tax only under this act or under the Integrated Goods and Service Tax Act in such manner and subject to such conditions and restrictions. This and restrictions word was later on added and within such time as may be prescribed. So section 49.3 is on cash ledger, 4 is on credit ledger, 49.3 permits every payment, 49.4 only towards the output tax. Then we have 85.4, rule 85.4, which says that any amount deducted under 51 or 52 or amount reverse charge or the amount payable under section 10, that is composition person, any amount payable towards interest, penalty, fee or any other amount under the act shall be paid by cash ledger. So 85.4 have clarified that whatever amount which is required to be paid and for TDS, TCS or a composition person will be paid through cash ledger as per the cash ledger maintenance liability. Now let us try to understand the difference. We know this controversy that where the pre-deposit was restricted, pre-deposit was earlier objected through electronic credit ledger, and what was the reason behind that? Let us try to read this definition which is given in the output tax, section 282. It says that output tax in relation to taxable person means the tax chargeable under this act on taxable supply of goods or service or both made by him or by his agent, but exclude tax payable by him on the reverse charge. And that is, that this has been interpreted in this judgment, Jyoti Constructions, and later in another Patna High Court Flipkart judgment, and they have interpreted that this output tax is very strictly, they cannot be mean to cases where refund has been refund. There the notices is on refund as well as input tax credit. For that, you cannot utilize the electronic credit ledger at all. And you can only make payment through electronic cash ledger. Even though there were similar kind of judgments in the pre-regime, even the form also allowed Rule 107. There was a judgment in the Bombay High Court, Oasis Reality, which says that in section 1076, it does not say the word to be deposited. It says that the tax need to be paid, and that for the payment, we can very much utilize electronic credit ledger. But there are other courts which have interpreted that this is not output tax, and that is why it is not it cannot be paid through credit ledger. All thanks to this circular 172, which clarified the position, and this Flipkart internet judgment, which has traveled to the Supreme Court currently, has been stayed. This judgment has been stayed, and which has clarified that input tax credit can be utilized for the payment, making a payment of pre-deposit. But let me ask you a question: that if there are many cases which are being built on reverse charge, are the appellate authority checking specifically relating that this RCM cases pre-deposit is made through cash ledger or not from the credit ledger? Are they checking, or is it required compulsorily to be made through cash ledger? What are your views? If let me repeat my question. Yes.
As the
Sir,
law says that the RCM has to be paid in cash, So if I am aware that the demand is of RCM, so we should ideally pay it in cash, pay the pre-deposit also in cash. But having said that, the appellate authorities are actually not checking whether it's a RCM payment, RCM liability, and that's why whether you have paid it through ITC or not. They're only checking the fact that whether there is a 10% payment or not. So
Deposit
that
or
is something
not.
that they're doing. Yes, yes, yes.
Arupji, not just a pre-deposit. Let's say there is a DRC 01 that is raised. Now the demand is paid through the ITC also is not, there is no validation done.
Right.
So I can
No, right.
close the demand itself.
Sir,
Yeah.
RCM cannot be made using the ITC, no, sir, because the output tax excludes RCM. The
Yeah,
definition
that's
of
why
output tax
technically you
excludes.
cannot do it.
Yes. Yes.
Yeah.
As per law, you cannot do it, but
There is no
technically
mechanism to
the
check.
portal allows. Yeah, there is no check.
One more question to all of you, that although we have this circular to help us, which is in our favor, but if we strictly read this output tax definition, which is permitted, is it not, reflecting that it has a very restrictive usage of the electronic credit ledger has very restrictive usage?
Ramanji, before we go into this, regarding your
Yes.
question, yeah, I have come across cases where officers are saying that if they have determined any liability where reverse charge was not paid, such liability by taxpayer should be paid in cash only. So there are situations like this
So
where
some
officers are
appellate
insisting
authorities
on
are
this.
very much aware and they are checking.
Yeah, they are aware, they
Yes.
are insisting on this. Only thing is there is no mechanism there when DRC 07 is issued. The liabilities which are they due to reverse charge or liabilities due to any other things,
Yes.
there's no distinction there. It is clubbed under only one head, liability.
Yes.
So
Yes.
that is impeding that, but officers are aware. They are insisting taxpayers for it.
Yes.
Yeah, please.
And Ramandeep, this is also happening at Rajasthan, wherein royalty demands are a lot. So, in cases wherein either the demands are being paid or appeals are being filed, both the officers and the appellate authority are very well aware that whether the RCM demand or the pre-deposit is being paid through cash. And I am aware of some cases wherein for availment of amnesty scheme, the taxpayer had paid the RCM liability through ITC, and the officer rejected the amnesty scheme benefit, citing that you have paid through ITC.
Right. Especially, sir, Arpit sir, what happened in sometimes when there are multiple matters due to some assessment or audit, and all of them are clubbed together in a show cause notice, in single show cause notice, there the problem at least arise that people are not checking in so much detail. In our state, Chhattisgarh, they are clubbing everything in the same single notice itself, and that is why this problem arises usually.
Yes.
So what is the view of the house for this output tax? Is this a kind of a restrictive meaning, or we still believe with this definition, everything can be paid through except RCM? Except RCM, everything can be paid through this output tax.
Ramandeep ji, I put a question in the chat also. What about an
Yes.
ITC reversal? Is it called as an output tax?
Yes.
Because when I availed excess ITC, ineligible ITC, I need to reverse it, and demand is created. Now that demand I am also again paying through credit ledger. Now,
Yes.
strictly earlier rule 42, 43, the words used reversal of ITC to be treated as output tax, but that is also got changed. That word is now no longer there in the rules. Earlier it was there, but now they have amended and removed. Added to output tax, the word has been removed.
Yes. Only indication I feel that whenever you may have noticed that when we filed GST or 3B and our reversal used to exceed this reversal used to exceed from the availment, this liability automatically gets added to our output tax liability, and for payment of that, I mean, we can very much we have to pay it through by cash or by way, but it gets added in our output tax liability when the reversal exceeds. This mechanism, I think, gives an indication that the form and the procedures prescribed permits us to even pay the ITC reversal, excess ITC reversal can also be treated as an output tax payment. But ideally, if we just read this definition of output tax, it doesn't seem it is allowing, it is having a full freedom of paying everything except reverse charge.
Agreed.
Yes,
It's like we are deriving the word.
yes, yes,
Agreed.
yes. So
Ramandeep,
let us yes, sir.
one thing on pre-deposit in the section itself, 49.3 and 4,
Yes, sir.
if you see the provisions, let's
Yes,
specifically see 43.4 since that's the question. The
yes.
amount available in the electronic credit ledger may be used. So one view can be taken that it is a suggestive section wherein it doesn't say it should be used. It uses the word may.
Hmm.
So
Hmm.
electronic credit ledger may be used for making payment of output tax, which means it is suggesting that you make payment for output tax, but there's no restriction that you can't make use of it for making any other payment.
Okay, okay. And that is why, by the virtue of circular, indirectly we can say
But
that department has allowed us.
may word is used both in subsection 3 and 4. May is used both.
Yes, 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 correct.
Doesn't matter. 3 is anyways fine, but it's specifically used in 4 also. So it means that credit ledger is only a suggestive thing.
Hmm.
And of course, circular is supporting us.
Yes, 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 yes.
Ramanji, may I?
Yes, sir, yes, sir. Please, sir. Go ahead.
So, sir, I would like to bring to your attention Rule 85.
Hmm.
So, Rule 85 is the rule about electronic liability register. So,
Okay.
there in Sub-Rule 2 and Sub-Rule 3, there is a distinction to my
Hmm.
reading.
Hmm.
Sub-Rule 2 talks about that the liability register of the person shall be debited by the amount payable towards tax, etc., as per the return furnished by the said person. Clause B says that the amount of tax, interest, penalty, or any other amount payable as determined a proper officer in pursuance of any proceedings or as ascertained by said person. Okay. So this says that the liability register shall be debited. There are two situations. They are separately classified in clause A and B. Clause A is about the return. Clause B is about the determination of amount by the proper officer in pursuance of any proceedings or by the said person. So, or by the said person would be the voluntary payment as envisaged in section 73 or 74 or maybe 74A now. And sub-rule 3 says that subject to the provisions of section 49. So sub-rule 3 is subject to the provision of section 49 where it says the output tax, the credit ledger can be used only towards output tax. It says payment of every liability by a registered person as per his return shall be made by electronic credit ledger maintained as per that or the cash ledger. So this is only the return filing part in the rule which is regarding liability register, which is subject to 49. The earlier sub-rule 2, which is about, say, the clause B specifically, that is not subject to 49. In the rule sub-rule 2, they say that all this has to be paid, this. It is only sub-rule 3 where it is clarified that only the return part is subject to provisions of section 49.
Okay.
So
Okay.
the liability which gets determined, and it shall be that gets debited. Now, how that has to be paid? That has to be paid through credit ledger, as per the rules relating to liability register. This has to be read with the rules related to credit ledger. Okay, credit ledger rules are there, but the liability ledger rules are saying this, and only the return part, filing part is subject to provisions of section 49.
Okay. Interesting, sir. Interesting. Very interesting. We'll definitely read once again this rule to check.
Yeah, this is for
Okay,
everyone.
thank
But
you.
this came into the picture because we are discussing Section 49.
No,
So
no, sir,
whenever we
Gurjit sir,
discuss things,
I'll
Gurjit
definitely
sir,
read it.
we read.
Yeah.
yeah, Gurjit sir, may I request you to
Sir,
repeat this once again? Sir,
Bolo
sir, the
sir.
last few,
Sir, sir,
the last
Sir.
two lines. Sir,
So,
Gurjit sir,
sir,
can you repeat the last few lines?
yes, sir. What we are saying is that, okay, the rules related to credit ledger or maybe the Section 49 specifically uses the word output tax has to be paid by credit ledger. But
Yes,
all
sir.
these, the payment, etc., is subject to conditions or in the manner as may be prescribed. So prescribed is in the rules. We are not for now going into the part whether the rules can override the act, etc. That's let's keep that thought aside. When we
Right.
go to the rules which are related to the liability register, so there is sub rule 2 of Rule 85, which says the liability register shall be debited. That is creation of a liability, and it shall be debited for three things: A, B, and D. C has been omitted. So A is
Yes.
about the amount shown by the taxpayer in their return. B is about the amount determined by the officer or determined by the taxpayer. Self-asserted.
Yes.
Self-asserted leads to that 73, 74 voluntary payment. D is about any amount of interest that may accrue from time to time. So this is about the entry getting created in the liability register. Here only the entries are getting created. So entries in liability register get created either by
Right.
returns or by determination of that amount. Now, when we come to sub-rule 3, sub-rule 3 says that subject to the provisions of Section 49, payment of every liability by a registered person as per his return shall be made by debiting the credit ledger or the cash ledger. So what I'm trying to draw the attention is that it is only sub-rule 3 which talks about the payment of liability in the return which is subject to Section 49.
Okay.
So this subject to Section 49 in the rules, in the related to the liability register rules, is not for the determined amounts.
Which are
So,
determined under any
Whether we
procedures.
talk about pre-deposit or RCM or anything else, if the liability has been determined, there is an entry into liability register that has to be paid. Okay, but the amount has to be paid. Yes, it should be paid regarding this, but the sub rule says that this next sub rule says that it is only the return filing which is subject to Section 49. This is the liability. If we say go to the credit ledger rules, they could be that is, credit ledger shall be debited to the extent of discharge of any liability in accordance with provisions of Section 49. There it is not
Right.
making any distinction, but we can use the liability register rules to our advantage. Maybe it is a thought for everyone to be shared and given.
Thank you, sir. Thank
right,
you.
sir, right,
Paul Thangam sir, you wanted to share something? Paul Thangam sir? Okay, Ramandeep,
Sir, no,
over to
sir.
you.
No, sir. No, sir.
Sir, one point,
Okay.
sir.
Okay.
Sir, one point, sir. I was just trying to
Yes,
read.
ma'am. Yes, ma'am. Yes, ma'am.
Even if we read this Rule 86, even that also says, sir, like the electronic credit ledger shall be debited to the extent of discharge of any liability in accordance with the provision of Section 49. So, should we not read 85 subsection 3 and 86 Rule 86 sub Rule 2 together, sir? Because even electronic credit ledger is also referring to 49. And electronic liability ledger is also referring to 49. So,
Right.
should we restrict only to the extent of return is my thought, sir, because I understand that 85 has used the word as per his return, whereas 86 has given more wide power and they have said in accordance with the provision of 49. And 49 is using the term as output tax. So I think we should read it
That is
together.
it. Yeah, it
Yes.
is only this that Rule 86 is saying like that, but in Rule
Yeah.
85 we have a small leeway. If we can use that leeway, to what extent can we use what it can be used, that is for thought and for further discussions and wherever it comes. But it gives a leeway.
Yes.
Okay. Okay, sir.
Rule 86 does talk about that it has to be, but Rule 85
Yeah.
is very clear that it is only the payment of liability through return which is subject to provisions of 49. So there are things like that. It was not being specified. That is silent about that. It is not talking about this. That distinction is there in liability register rules. It is not there in the credit ledger rules. So we will take it to the advantage of taxpayer. Multiple arguments. Yes. But yes,
Now
there
this,
is some scope.
yeah.
There is some scope to
Okay.
argue and to develop this. Even I am conceding that Rule 86 does clearly say that it is subject to 49, but we have a small leeway in Rule 85.
Mm-hmm. Because now, like penalty appeals will be there. So there pre-deposit also we have to pay. So there it
And
is
when,
like we have to use the cash ledger. Yeah.
yeah, and
That,
then whenever, and it again say the forms which are prescribed, they are also part of the rules. So when the liability is determined by the officer or it is self-determined by the taxpayer, so we come to DRC 03 or DRC 07. There it is just the column is only liability. It is not segregated into output tax, ITC, RCM, etc. All that.
penalty. Yeah. Yes, sir.
So that gives again force to that thing. That the restriction regarding all these is as far as the return filing is concerned. When liability is determined, it is a common single basket which is there.
Right.
It is also what Venu sir was asking, that whether that reversal should be
ITC
added to
reversal.
the liability. It is as far as the return filing is there in GSTR 3B, reverse the ITC. But if officer determines it, it becomes a liability. It is then ITC is not to be reversed. It is a liability which has to be paid either through cash or credit.
Yeah.
That would be my reading. But it's further views are welcome when we keep thinking on this and we develop our thoughts on this.
Okay, sir.
So we'll explore this view and let us go ahead. So we were reading 49.4 and 49.4 has two interesting words in it. It says that subject to such conditions and restrictions that got later added. And going by this, there is a rule 86A which says as condition of use of amount of electronic credit. And all of us know that there are this use. There has been two words here which says that fraudulently availed or is ineligible, and in that also it says there are on what ground. It says the credit of input tax has been availed on the strength of tax invoice, debit notes, or any document, and it says that issued by a registered person who was found to be non-existent, not to be conducting any business without the receipt of goods or services or both. So let us see a case and some issues relating to that. That Mr. Chintu is a dealer of cement and has faced an issue that his credit ledger have been blocked by the SGST department on 25/4. He has received an intimation directly that his credit ledger is blocked by certain amount. Does the provisions of law allow the department to take such action? Will your answer be different if it is done before 1st of October 2022? Is there any requirement of giving an opportunity to the taxpayer before taking any such action? Can blocking of ITC be done for interest penalty amount also? The demand of Mr. Chintu for which ITC was blocked is constituted of this two important part. Number one is that non-payment to suppliers for the period of 180 days, complaint letter sent to AO by the supplier. And how did the AO know? Because the supplier has made directly complaint to the AO of recipient saying that he has not made me payment of 180 days. So you should restrict his credit. So 25 lakh ITC was of 180 days. Number two is supplier has not filed GST or 3B and has not paid the tax to the government of 15 lakh. It should be noted that Mr. Chintu has availed the ITC on the strength of invoice and had a proof of transportation and also made payment to suppliers. Now, Mr. Chintu feels that since there is no balance in the electronic credit ledger, hence blocking of credit is incorrect and not permissible by the law. Blocking can be done only if the credit is available in the account. The department has issued DRC1 under section 74 for the reversal of input tax credit along with interest and penalty after 30 days. Mr. Chintu feels that since now the department has issued show cause notice, blocking of input tax credit should be removed as he is unable to file GSTR 3B due to negative balance in the electronic credit ledger. Please advise Mr. Chintu, according to the learned member of SMS, when should be blocking credit be removed. Now, once the show cause notice is issued, can the registered person alternately ask the department to unblock at least 90% of the block, as only 10% of the liability would be required to file to pay the for filing appeal as a pre-deposit. Now, one of the consultants from SMS Group is of the view that blocking of input tax credit is nothing but attachment of the property under Section 83 of CGST Act, and therefore it has to be used as a last resort, relying on the judgment of Apex Court Radhakrishna Industry and State of Himachal Pradesh. Even after the against order is issued, Mr. Chintu has filed before the appellate authority. Still, the jurisdiction officer has not unblocked the credit ledger. 1 year is about to expire, and Mr. Chintu is afraid that the officer, after unblock of 1 year, will again block the credit for 1 more year. Please guide. So, what are your views? The first part, whether this provision can is a restriction or a condition, is one important point which we have to check, because this 14.4 says that subject to such conditions and restriction, and this restriction word is added from 1st of October 2022. And here our authority is blocking this input tax credit. Is it a restriction, condition? And whether they are within their right, they can restrict even when it was not allowed before. Is there any requirement of giving an opportunity to the taxpayer before taking such action? The taxpayer, the taxman version says that if we will give him an opportunity, he will pay, he will immediately bill everything, he will transfer the credit, he will move away, he will run away, or whatever point he will do. So the first action they want to block credit and then give the opportunity, they feel.
No, but according to the principle of natural justice, he has to give an opportunity of being heard. So I think so that
Even though it
opportunity
is not
should be
mentioned in the rules itself.
Yes.
Arupji, blocking can be done for interest and penalty also. Yes, sir, Arpit sir.
No, Ramandeep, I was just asking Arupji that it's already 10:15. So let's keep this discussion as a Ekta Kapoor show. That what happens next? Question number.
Right, sir, right. Yes.
Right.
Yes, Arupji.
So I think I will continue with this. Yeah, what happens next? I will continue with this. So I'll speak to Ramandeep ji and then maybe we'll finalize the time. So thanks to Ramandeep ji, I think as it happens with every SMS, every time we have new ideas. And today, I think Gurjit sir has brought in a new aspect which I've never thought of. Ramandeep ji has ignited this discussion because of including so many aspects and bringing in Chintu ji and SMS group consultants. So thanks to Ramandeep ji because for taking this responsibility at such a short notice, maybe because I know he's also quite busy with 99C, but in spite of everything, he's done it. So thanks to him, thanks to all the group members for joining, and we have proved that 99C se bhi bada hai apna SMS ka, brainstorming. So I think that's a huge aspect. So thanks to everybody. Have a wonderful day ahead and looking forward.
Right, completely my pleasure to discuss with all of you, all the learned member of this group. If I could at any point discuss anything with all of you. Completely my pleasure.
I think you have ignited many new things. So I think that's good. So, and hopefully the extensions for 99C come fast and we enjoy the year.
Right.
Bye. And have a wonderful day ahead. Thank you. Thanks.
Thank you.
Thank you.